Let me ask you something real quick. If you lost your job tomorrow, not in a month, not in a year, tomorrow, how long could you survive? Like, realistically. 1 month? 2 months? Maybe 3 if you cut everything? Here's what the data actually says. 57% of Americans cannot cover a $1,000 emergency without going into debt. Over half. And that number hasn't changed much in a decade, despite a so-called booming economy. So what's going on? Why does it feel like no matter how hard people work, they just can't get ahead? Today, I'm going to show you exactly what's happening to the middle class in America, and more importantly, what you can do right now to make sure you're not one of the casualties. Stay with me, because what I'm about to show you is going to change how you look at money forever. Okay, let's talk facts. In the 1970s, roughly 61% of Americans were considered middle class. Today, that number has dropped to about 50%. That's not a blip. That's a structural shift, and it's been happening slowly, quietly, for decades. But it's accelerating, and here's why. Strike one, inflation is not going away. Yes, the Fed has raised interest rates aggressively, but your grocery bill, your rent, your insurance, they're not going back to 2019 prices. Inflation may slow down, but the damage is already baked in. That loaf of bread that cost $2.50 5 years ago, it's $4.79 now, and your salary probably didn't go up 90% to match. Strike two, the cost of the big three has exploded. Housing, healthcare, education. These three categories used to be accessible to anyone willing to work hard. Now, the average home price in America is over $400,000. Health insurance premiums have tripled in the last 20 years, and the average student loan debt over $37,000. People aren't spending too much on Starbucks. They're drowning in the fundamentals. Strike three, job security is an illusion. We've watched tech companies, some of the most profitable companies in history, lay off tens of thousands of workers, not because they were struggling, but to optimize. AI is not coming for jobs in the future. It's already here. Customer service, data entry, writing, coding, graphic design, entire job categories are being restructured right now. And I say all of this not to scare you. I say it because awareness is step one. You cannot fix a problem you don't understand. So let's understand it, and then let's fix it. All right, here are 5 concrete moves you can make right now to start getting ahead no matter where you're starting from. Move 1. Kill high-interest debt first. No exceptions. If you have credit card debt at 24%, 26%, even 29% interest, that is a guaranteed negative return on your money. There is no investment on the planet that reliably returns 25% per year. Not stocks, not crypto, not real estate. Before you invest a single dollar, obliterate that debt. Use the avalanche method. Pay minimums on everything, throw every extra dollar at the highest interest rate first. Once that's gone, roll those payments into the next. It's not glamorous, but it works. Pro tip, call your credit card company and ask for a lower rate. I know that sounds too simple, but research shows that over 70% of people who ask for a rate reduction get one. They just never ask. Move 2. Build a 3-month emergency fund in a high-yield savings account. I know you've heard this before, but here's what most people miss. Where you keep your emergency fund matters. If your money is sitting in a traditional savings account earning 0.01% interest, you're literally losing money to inflation every single day. Right now, high-yield savings accounts are offering 4.5 to 5% APY. That's real money. On a $10,000 emergency fund, that's $450 to $500 a year you're getting paid just for having your money in the right place. Switch your account this week. It takes 15 minutes. Move 3, invest automatically and don't touch it. Here's the uncomfortable truth about investing. Most people never start because they think they need to know everything first. They're waiting until they understand the market better, until they have more money, until the timing is right. That moment never comes. The single best thing you can do is set up automatic contributions to a retirement account, a 401k if your employer offers one, a Roth IRA if not, and invest in a simple, diversified index fund like an S&P 500 fund. Here's why this works. $200 a month invested at the average market return of 10% per year from age 25 to 65. That's over $1.2 million. $200 a month. That's less than most people spend on eating out. And here's the part that really matters. Time in the market beats timing the market every single time. Stop watching the news, stop trying to predict crashes. Buy regularly, stay consistent. Let compound interest do its thing. Move 4. Create at least one additional income stream. This is where things get exciting. We are living in the greatest era of opportunity in human history for creating additional income. I know that sounds bold, but think about what's available to you right now. You can freelance your skills on platforms like Upwork or Fiverr. You can create digital products, ebooks, templates, courses that sell while you sleep. You can monetize a YouTube channel or a newsletter around something you already know and love. You can flip items on eBay or Facebook Marketplace. You can drive for a rideshare app on weekends. You can rent out a room, a parking space, or camera equipment. I'm not saying do all of these. I'm saying pick one that fits your skills, your schedule, your interest level, and commit to it for 90 days before you give up. Most people quit at day 30 because they haven't made money yet, but building a side income is like planting a tree. The best time to start was yesterday, and the second best time is today. Even an extra $500 a month changes your financial life. That's $6,000 a year you can throw at debt or invest, or use to start something even bigger. Move 5. Invest in yourself aggressively. This is the one most people skip, and it's the one that pays the highest returns. The market averages 10% a year. Real estate might get you 8 to 12%, but improving your skills, getting a certification, learning a high-income skill like copywriting, coding, sales, or financial planning can literally double your income. I'm talking 100% return on investment, sometimes more. Read one book a month about money, business, or self-improvement. Take one online course per quarter. Listen to podcasts during your commute. Protect your mind like you protect your money, because your ability to earn is your greatest financial asset. Let me give you the formula. Simple, repeatable, proven. Earn more, spend less than you earn, invest the difference, protect what you build. Repeat. That is the entire playbook. The complication isn't the strategy. The complication is the discipline, because everything in our culture is designed to get you to spend your money. Ads, social media, influencers, all of it is engineered to make you feel like you're missing out if you're not buying something. The wealthy know something most people don't. Assets make you money while you sleep. Stuff just sits there. So every time you're about to spend money, ask yourself this one question. Is this moving me toward freedom or further from it? That question alone, asked consistently, will change your financial life. Look, I know this is a lot, and I know it's not easy. If it were easy, everyone would be doing it. But here's what I want you to take away from this video. You are not stuck. No matter where you're starting from, the moves I just laid out for you, killing debt, building savings, investing consistently, creating extra income, and leveling up your skills, these are accessible to almost everyone. You don't need to be rich to start. You just need to start. If this video helped you, do me a favor, hit that like button and subscribe, because every week I'm dropping content designed to help real people build real wealth. No fluff, no get-rich-quick schemes, just the strategies that actually work. And drop a comment below. Which of these 5 moves are you committing to this week? I read every single comment. Let me know. I'll see you in the next one.